Hello guys, my name is Nivaldo Soria with South Florida Investments. And today I'm here because there has been a big impact of the high increase of the interest rate for buyers and sellers. And buyers or selling has been paying the cost and will continue to pay the cost of waiting to sell or buy a property. Now I'm here today to tell you a video and to explain to you in a video how big and how deep the raise on the interest rate has been impacting the buyers and sellers. First, you have to understand that when you go to the bank as a buyer to ask for a loan, automatically the bank doesn't give you a loan. What the bank does is they check your credit, your monthly income, and your monthly expenses. Based on those three things, they come out with a monthly payment that you are able to afford for the loan. After that, they take that monthly payment combined with the current interest rate and they come up with a loan amount. So they say, Mr. Shane, we're going to give you $500,000. Okay? You have to understand the process. Now, let's take an example of $500,000 back in 2021, December, that the interest rate was about 3%. And let's take in consideration that Mr. Shane that we're using for this transaction was only able to use to pay $2,100 a month. That is principal and interest. We're not counting taxes. We're not counting homeowners association. So Mr. Shane back in 2021, December, was able to afford $2,100 a month. So therefore, the bank told them that they were going to able to lend them $500,000 loan. Okay, so in December, he was only $2,100, $500,000 on. Mr. Shane couldn't find a property in December because the inventory was very low. So he decided to wait. Okay, so then he went back to the bank recently because he needed to get an updated pre-approval letter. So the bank told him, okay, Mr. Shane, we're still going to give you the loan, okay, but now, since you're only able to afford $2,500 a month, we can only lend you $340,000. So Mr. Shane that was planning to buy a single family home, now he cannot afford a single family home. He might have to go back to an apartment. Okay, so Mr. Shane might not be an active buyer on the market anymore because his expectation of finding a new property are not longer there. So how does this apply to you as a seller? If you as a seller have been waiting, and you were selling a property for prospect that needed a loan amount of $500,000, guess what? The demand for your property just went down. So you used to have 20 active buyers looking for properties. Now you have only 5. Okay? So now we're already here. Right now, the active interest rate for the 30-year fix is 6.3%. Okay? Between 6.3 and 7%. Now, if you keep waiting, the interest rate are expecting to hit 8% or above. So let's say Mr. Shane decides to wait and go back into the bank 3 or 4 months from now. Tell him, welcome back, Mr. Shane. Assuming your income, credit, and expenses have not changed, we're still going to give you the loan. However, we're no longer able to loan you $340,000. Now we can only loan you $287,000. So his expectation went even lower. So you as a seller, the longer you wait, the less demand that you're going to have on the market because 95% of the people are depending on the loan to go down. Now, in the other hand, if you are a buyer, you will tell me, hey, Nivaldo, and what about if the real estate prices go down? I say, yes. That's a good question. They might go down. In order for you to be able to afford this type of property again, the same type of property that you were able to afford in December 2021, the real estate prices need to go down by 50%. 50% drop on the real estate market, not even in 2008, okay? So the longer you keep waiting, the less possibilities you're going to have. So you're a buyer or a seller, and you do need to buy and you do need to sell, the moment is now. Do not keep waiting because it's going to get more complicated for both of you. Thank you for watching this video. and I will see you guys very soon.